Hello and welcome to my video. I'm Cody the Coin Raptor, and I want to go ahead and talk to you about a very interesting pattern that I've noticed over the long term with Bitcoin. And before we get to that, be sure to hit that subscribe button if you like this content, and also be sure to follow me on Twitter for the most up-to-date information. Okay, I would also greatly appreciate a like if you enjoy this content and you would like to see more. So with our Bitcoin, what we have here first is I want to show you the 2018 bear market, okay? So I've drawn this out before. I've described the kind of deconstruction of the previous bear market, and I've said, okay, we have this first capitulation event here, right? You can kind of draw this in as a triangle, and then you had a further second capitulation event, which actually pushed the price even lower. Now, after it broke out of this little this downtrend, right? You see this little downtrend here. We actually had a pretty large increase to the upside. It's 154% gain from about here or so in this area that we've moved sideways. Now, if you take a look at the RSI, you can also see a corresponding move here in the RSI. It went from about 60 all the way up here to about 80. So we had a pretty large corresponding move in the RSI as buyers piled in, as shorts were squeezed, and as people accumulated more Bitcoin. Now, fast forward to today, and we see something very similar happen, okay? However, it is a little bit different because history doesn't oftentimes repeat itself exactly, but it will be very close. And what we see here is a similar kind of pattern play out. However, it's more of an elongated pattern, okay? You had your first capitulation event here. And then you also had the second capitulation event happen when it dumped through the bottom here and went under 30K. And then you even had another third capitulation event happen back with the FTX collapse. Now, that was very short-lived, just kind of like what we saw here with the second capitulation event down in 2018. Again, very short-lived. You can kind of see the exact same pattern play out. However, this is a little bit more elongated. And as we take a look at where we are right now, we're kind of in this sideways chop area right here, which is very similar to the kind of sideways chop that we saw back in what about April of 2019. Okay, this sideways chop was very short. It's about 5 weeks or so. Our sideways chop is a little bit longer than that. It will probably remain a little bit longer than that, as like I said, everything with this pattern that's repeating is more elongated. So I think that it's entirely possible that if we can get a push above 25K, above that 25,000 level that I've talked about here or so, if we can get a strong push above this level, then we can definitely wind up seeing a large gain. Now, I'm not entirely sure if we're going to get that 154% gain that we saw previously over here in 2019, but I do think it would be a fairly sizable move. In fact, I think we'd probably come up here back to at least 30,000. But that is all reliant on whether or not Bitcoin can overcome this 25 level. And this level right here has been incredibly stubborn resistance. And the reason for that is if we go ahead and take a look at the 200-day and the 50-day, we can see that they both are right in this area, creating incredibly heavy resistance for Bitcoin to overcome. But I do believe if Bitcoin can overcome that resistance, then we can definitely get a push above here to about 30,000. And that would be a strong indicator that the Bitcoin bear market is over and that the lows that we made back in December and November are in. So I think that that's definitely a possibility. And it's pretty crazy when you take a look at this. I'm going to zoom out here and you can see how similar these charts look, even though the one that we're currently in, the current cycle, is just a little bit different, a little bit longer. You can see that it's still very similar. And so I will be looking out for this. I'll be watching this area very closely, that 25K level, to see if we can push above it. Now, if we go ahead and take a look at our Bitcoin historical annual returns, which is something I like to look at about the end of every month, we can see that February has not been a particularly great month for Bitcoin. It's only up 0.43%. Now, that's not really typical of February. It did happen one other time, but usually with February, you usually get a double-digit gain type of month. However, when we take a look at March, the story is quite a bit different. Now, March is usually a red month for Bitcoin, and so that's why I do think we'll probably wind up getting some more sideways chop, at least through March. However, when we get into April, we start to get a little bit more green as on a whole, and we'll see as things continue on. But typically, February is the best month for Bitcoin, right next to October. It's February and it's October that Bitcoin tends to have the best months. Now, we're going to go ahead and also take a look at the demand, okay? So we're going to go ahead and take a look at the active addresses. I always like to keep track of Bitcoin's active addresses, and right now it seems like that's stabilized quite a bit, because previously what we had here is a pretty large dip during like the middle of the bear market here in December 28th, in which you had a low of active addresses. Now it's gone up quite a bit, and it's stabilized quite a bit here, and we're starting to see it's actually still above where it was in July of 2021, which I think is still pretty bullish, considering the fact that July of 2021 was right in the middle of the bull market. However, you'll remember that China tried to ban Bitcoin mining at the time, and that's probably what caused this huge collapse here in the number of active addresses. But if you can see here, we have a pretty strong uptrend of Bitcoin active addresses, and this uptrend is still intact. So there's still a lot of demand and usage going on right now with Bitcoin. And if we take a look at the addresses with greater than one Bitcoin, we can see here that that's actually increased quite a bit over the last 2 months. And now we're at 982,000. Again, very close to that 1 million mark. We're at 982,000, and we've almost seen this kind of parabolic increase in the number of these addresses that have had at least have had greater than one Bitcoin ever since the start of that November collapse that was caused by the FTX collapse. Okay, now if we actually go ahead and take a look at our Ethereum charts, I want to go ahead and go through our Ethereum weekly. Ethereum has broken out of that long downtrend that we talked about before. I made a previous video on that, and I said, okay, well, now we've pushed strongly above that, and so this downtrend here is no longer applicable. So I'm going to go ahead and take these channels out right here. Now, if we take a look at where we are right now, I've put in some other trend lines here to indicate the fact that we're right in the middle of a trading range, again, from about 1732 to about 1484. There has been a lot of sideways chop here with Ethereum. It tends to settle in this area that it's in right now, and in order to push it higher, it has to climb above this level here at 1732, and then push above this level here at about 2000. If we go ahead and take a look at your 50 and your 200 day, what's funny about this is it kind of sticks right in the middle of both the 50 and the 200 day. You can see that the 200 day is about 1569, and the 50 day is at about 1729. So it is kind of funny how things kind of play out right now, but people do look at these indicators. They do look at the 200 day EMAs. They do look at the 50 day EMA. This isn't the weekly, by the way. So they look at the 200 weekly EMA, and they look at the 50 weekly EMA. And so it's kind of chopping between these two right now. What we've seen here in the past, especially, is that the 200 day or the 200 week EMA tends to be strong resistance. Right now, it's acting as strong support. And then the 50 weekly right now is acting as resistance. Okay, so what we'd like to see is it push above those levels like I was saying before. Again, I put the trend lines back in here. We want to see it push above those levels, and then from there go on past 200. Okay, and if we go ahead and also take a look at the RSI as well, RSI is telling us right now that we're in the middle of an uptrend. And in fact, if we zoom in here, we can see that this uptrend has been intact ever since June, believe it or not. So this uptrend is pretty steep, pretty dramatic. And you can kind of draw this in however you want to, but it just illustrates the fact that ever since June, right, there has been an increasing demand for Ethereum. Now, you also get a bunch of sellers that come in here and they sell, they buy the dip down here and they sell the rip, and that's partially the reason why Ethereum hasn't been able to retake that 1700 level. But overall, if we take a look at the RSI, and we can see that demand for Ethereum has been increasing ever since its June collapse. And it does seem like to me that that June collapse for the Ethereum price was probably the low for Ethereum, because it's going to take a lot to get it back down here to 1880. You'd have to have a pretty major capitulation event happen in order for that to be the case. Maybe there is something wrong with the Ethereum network, or there is an issue or a major hack that would send it lower. It would have to be something pretty dramatic, because this June event here was caused by the Celsius collapse and the further market panic, and then you had the Terra Luna collapse and all that. So that was pretty enormous. I think that for Ethereum, though, we're going to wind up seeing that the bottom is probably already in here at about the 1880 level, okay? Now, as for Ethereum, when we go ahead and take a look at our Ethereum monthly returns here, we can see that, oddly enough, for Ethereum, February is its best month, followed by March. Now, March is usually a very good month for Ethereum for some reason, and unlike Bitcoin, it is a little bit different here. And then April is also a really strong month for Ethereum as well. There's only been 2 red days, or 2 red months, or 2 red years for April, and then there's been 2 red years for March as well. But as soon as we get into May, June, and July, and August, things get kind of crazy. But for the next 2 months or so, Ethereum does tend to have green months for those months, okay? And then also, the last thing I want to talk about is the economic calendar and what we can expect from the economic calendar for next week. Now, there's nothing really that's going on next week that kind of stands out to me, but there are some pretty important things going on. You have some Fed governors speaking. You have some Fed presidents speaking. That could always move the market a little bit Monday and Tuesday. And then you also have the Case-Shiller Home Price Index. That could also move the market a little bit. But there's nothing really... that speaks to me and sticks out immediately. You have a number of Fed presidents speaking. You also have jobless claims as well, and another Fed governor. So this is going to be basically a week of Fed governors and Fed presidents coming out and speaking, and that's always a possibility that winds up moving the market, and we could wind up seeing, depending on how hawkish or dovish they are, that affect crypto prices as well. All right? So that's all I've got for you guys today. Let me know what you guys think about that pattern that I showed you. Do you guys think that this pattern here is actually going to play out in the same way that we saw back in 2018? And if not, why do you think that's not going to be the case? I'm definitely curious to hear about your guys' opinion on the matter. All right, this is Cody the Coin Raptor, and I hope to catch you guys in the next video.